Greetings and salutations, test takers. This is the Series 7 Guru coming to you from my off-grid studio, getting our kicks on historic Route 66 with an explication request. If you have an explication request, you can send it to explicationrequest@guruexamprep.com. Here's today's request. A bond convertible at 50 is selling at 105% of parity. We would expect that a convertible bond in the marketplace, secondary market, would be trading at a premium to parity. Here it's saying it's trading at 105% parity means equal. While the common stock has a current market value of 45, what is the market value of the bond? I would have the expectation that you're going to have to calculate parity once or twice on your Series 7. You can't be fumbling around with this math about how to calculate parity. Anyways, we have to do parity here to solve the question. Usually it's a little more linear on the test and just can you calculate parity? All right, so the first thing we got to do here is we have to recognize that when we're given the conversion price, we need to establish the conversion ratio. So, as a test taker, the minute I see the conversion price, I go, bastards. I don't need the conversion price. I need the conversion ratio. Those conversion terms are based on par. So what we're going to do is take par, we're going to divide by the conversion price, and we get the conversion ratio. So that's an intermediate step we're going to have to do in convertibles. Sometimes they give it to us. Maybe they say conversion ratio is 20 to 1 or something like that, in which case you say, well, thank you so much. So I wouldn't count on it being given them information. Okay, so the common stock has a current market value of 45. So we're going to take the market price of the stock times the conversion ratio, and parity, as I said, means equal. So this bond is equal to $900 worth of stock, right? If it's got 20 shares and the stock's 45, parity, the bond's worth 900 as it relates to the stock. That's what parity means. I'm an NBA fan. When we say parity, that means all the teams are pretty equal, right? Any, Anyways, it says it's 105% of parity. So now I take the $900 parity, I times it by the 105%, and I get the answer to the question, which is 945. Now, as a bonus, the other thing you might have to do is parity the common. In other words, if we pay 945 for the bond, what would be the equivalent? What is it equal to paying for the stock? So you're going to have to do parity of the bond, in which case we multiply, or parity of the stock. So as a bonus here, I'll just show you how we do parity of the common. We take the current market price of the convertible, we divide by the conversion ratio, and we get parity of the common. Now, what that means is that if we buy this bond for 945, we should have the expectation that the stock is going to be 47.25 at some point, because that's what the equivalent we'd be paying if we bought the bond and converted it into 20 shares of the common. Remember, the stock right now is 45. So if I were your broker, I'd say, well, listen, if we buy this convertible bond for 945, right now the stock is 45, and parity on the stock would be 47.25. So we're hoping the stock maybe goes to 50, anywhere above 47.25. It makes some economic sense. All right, so I hope you found that helpful. Remember, inch by inch, your parity calculations are a cinch. Yard by yard, your parity calculations are hard. And I will see you for the next explication request.